What's up, everybody? Welcome to another edition of This Week in Crypto. It's great to be back. I was absent last week, but my name is Brian. I'm here with my co-host Dino, along with our founder Maxim, and we are excited to jump into our very first call here in June. It's been a rocky week, to say the least. Before we dive into metrics, as always, I just want to remind everyone that our analysis on this stream is not to be considered investment advice. As always, we browse through our data with the goal of explaining what our metrics look like, not what we think is going to happen in the market, only using objective data. That's our goal here. So thanks so much for joining. As always, I am going to start off by showing the screener here to just give a quick glimpse at how the top 100 or so projects have performed over the last week. Bitcoin, as we can see, is just about flat on the nose. Ethereum jumped about 2.6, 2.7%. And then we had a few notables such as Filecoin up 30%, Kusama, Leo, and Pirate Chain, among others. But it was mostly a mixed bag among altcoins. We obviously had plenty of outliers, but nothing that was like an extreme 2x or a 3x, at least in the top 100, which is actually somewhat rare for most of the last months we've done. There's always at least one that seems to have really popped off. That wasn't the case here. So overall, we're seeing that this was more of a flat week than we've seen in quite some time, which is interesting. That being said, when I mention the markets have been rocky, I'm referring to the fact that there was a lot of volatility, especially early in the week, to get us to where we are now so that it appears flat over the last week. We have flattened out overall, but there was some serious volatility. Bitcoin got down to the low 30Ks at one point before it jumped back up to where it is now at about 36.6. And then Ethereum dropped down to close to 2,000 again. It was at 2,100 for about a day there early in the week before getting back to where it is now around the $2,600 to $2,700 range. So that's it for the recap on just price performance. We won't spend too much longer on that. And we'll jump right into some of the on-chain metrics here. We're going to start by just taking a quick look at Bitcoin's daily active addresses, volume, and social volume. For those who have been in our community for a while, you may remember Maxim's great article he put out about a year ago, maybe a little over a year ago, explaining that when daily active addresses, volume, and social volume move in tandem one direction, it can very often project where things are going. Now, this is only one metric, but we do see that, or I should say one grouping of metrics, and we do see a unison in direction right now. I know there are some overlapping lines here that may not show up perfectly on your screen, but from my screen, what I'm seeing is a big drop off over the last month in daily active addresses, social volume, and trading volume. Ever since about May 20th, there was a pretty big tick down, and daily active addresses, it actually dropped off about a week before that.
Yeah, and obviously, sorry, Brian, that spike in trading volume was obviously the capitulation spike. So
absolutely,
even though, yeah.
So we can absolutely consider this an outlier, but even still, if we look back to like April here, and of course way back in January, trading volume was significantly higher, and it's a little hard to see. Let me isolate it really quick for you. I'll just take off the other two here, full screen it, and you can clearly see the major drop off even before this huge capitulation spike here. Showing a pretty big downtrend. I mean, just about a month ago, we were sitting at about 70 billion per day. This is actually every 4 hours, I should say, but it's about 70 billion then, and now we're looking at around half that, 33, 35. It's a clear drop off, and it's really, I mean, we're at levels that we haven't seen since 2020. Technically, it looks like back in December. Mid-December 2020 is the last time we got to this 33 to 35 billion range in terms of 4-hour candles here. So with that in mind, and the fact that daily active addresses and social volume are all declining, it's pretty clear, at least from the fact that there's some disinterest going on. There's some hesitation. Probably some of those new traders who came in over the last 6 months, or more likely 2 to 3 months, they're starting to drop off because their overall performance is in the negative now. So this is kind of semi fear mode, which can be considered a good thing, but also it's a little concerning because volume, active addresses, and social volume are three of the primary metrics that can um, move Bitcoin in one direction. And generally, you want them to move up in order for prices to move up. And when they move down, it can temporarily be a bad thing until we just flat out see fear metrics in tandem with these.
Yeah. So just one thing, Brian, your mic seems to be giving off some feedback. I don't know if it's when you move or something, but there seems to be some like a bumping noise every now and again. It might be because it's interacting with, I don't know, something else. It's not technical. It seems like you're bumping into something with your mic. That's how it sounds.
Yeah, like a talk sound. And we hear it, but stream hears it too, it seems.
Interesting.
Yeah.
Well, let me know if it continues. I'm trying to just be still here. If it continues, just keep me posted, and I'll sign off and come back on.
And I think what you're saying is very much on point. And if you want to share or show Bitcoin's active addresses, actually it might be better to show the rolling 24-hour active addresses, where this metric gets updated every hour. So it's a bit more high res. So I wrote about this in the last week's report. Every end of the week, we publish a lengthy report about the state of Bitcoin at the moment. So what I said last week was that I have this threshold, and it's an imaginary threshold, so keep it with a grain of salt or whatever. But I have this threshold of 1 million daily active addresses for Bitcoin that I've been kind of using as a barometer of where Bitcoin is. Why am I using that as a sort of threshold? Because since the start of the year, up until May 15th, there have been a total of 9 days that the amount of unique addresses interacting with Bitcoin have been less than 1 million. So just to put that in perspective, so that's basically 5.5 months, where in that 5.5 months, there's only been a week and a half of Bitcoin's daily active addresses, even during the weekends and when the prices were ranging, only a week and a half in total, where the amount of unique addresses interacting with Bitcoin, meaning sending or receiving Bitcoin, have fallen below 1 million. And then between May 15th and May 30th, 14 out of those 15 days were days when Bitcoin's unique addresses have fallen below 1 million. So we've seen a fairly significant drop-off in the general amount of activity on the Bitcoin network. Today, for the first time in quite a while, we are luckily or hopefully seeing sort of a rebound in terms of the amount of demand for BTC and in general interaction with Bitcoin overall. However, this might also just be prompted by Elon's recent tweets, right? So the reason why Bitcoin has dropped over the last 12 hours or so was obviously because Elon has decided once again in a period which is very much a sort of crucial moment for Bitcoin, a pivotal moment for Bitcoin, because from a technical perspective, I've seen a lot of people talk about a potential bullish divergence. Bitcoin was kind of in that 39K range, looking to break 40K, and then Elon goes and tweets out a breakup meme about BTC. He shared some meme and then said, Bitcoin, and then a broken heart emoji or whatever, and immediately you see the price of BTC tank. So this could also be in response to Elon tweeting out another bearish tweet. So there's some elevated activity might actually suggest that there's more people looking to get out of the market, expecting further corrections. But that's sort of what we've been seeing over the last two weeks or so. Bitcoin's daily active addresses have been very much in a sort of lagging trend. Like compare it to Ethereum. Yes, Ethereum has had its ups and downs, but in general, the trend was on the uptrend or on the upside, despite this correction and despite this consolidation. Overall, as a rule of thumb, sustained price rallies usually like sort of sustained rise in daily active addresses. The reason for that is quite simple. A lot of people use daily active addresses as a proxy for the amount of demand in the coin and as a sort of fundamental support for a rally. So if you're seeing growth in price, but a reduction in the amount of users of the coin. Obviously, by itself, that also probably means a reduction in the amount of value that is being transmitted on the network. That's, from a fundamental perspective, not a great sign for the longevity of Bitcoin's price action or price uptrend. So one of the more concerning signals for Bitcoin, it's not the end or be all. We are seeing there's quite a few signals that we're going to be talking about from both on-chain data and other data sources that are relatively bullish about Bitcoin in the short term, but this one in particular, I would definitely suggest keeping an eye on in the next couple of days and weeks, because if Bitcoin's daily active addresses continue to decline, it's going to show a sort of a lethargic, network activity, and that's not going to be great for BTC, I think, in the long term.
Agreed. Thanks, Dino. Yeah, obviously super important metric here. Moving on, we will isolate just Bitcoin here for a moment. I want to share whale transactions just overall.
Try not to move too much, Brian.
You got it. If it's really bad,
yeah, it's quite bad. It's getting. I'm not sure if it's because you're moving. Is that a headphone mic or is it?
Yeah, it should. I could switch mics. Do me a favor, switch. Share your screen really quick, and I'll come right back.
Sure. Okay, let me do that. Yeah, because I thought it was because you were hitting something, but it doesn't seem like that's the case. So while Brian changes his mic, I'm just gonna briefly touch upon the biggest topic of the day. If you guys are not familiar, this list, which you can find on app.santiment.net/lab/trends, this list shows the top 10 words that are gaining the most volume on crypto social media, or the biggest amount of new mentions on crypto social media. Obviously, no surprise there whatsoever. Elon is getting the most attention over the last 24 hours because of its recent tweets about, breaking up with Bitcoin or whatever. Very interesting timing, considering both, Bitcoin's on-chain and technical analysis and a general outlook. But it is what it is. On top of that, there have also been some additional bearish news. I think Morgan Stanley published a letter to its investors, or it was just like somebody from Morgan Stanley was asked whether institutional investors are buying this Bitcoin dip, and the answer was no, and that they are expecting further correction. So there are some basically, bearish markers from a news perspective about where Bitcoin might be headed next. However, like I said, it's not all bad news on the Bitcoin on the side of Bitcoin's indicators. We are going to be talking about a few fairly concerning markers, but in the short term, there's also a few things to be sort of hopeful for. So I don't know, Brian, how's your mic looking?
Test 1, 2, 3. I switched it to my headset instead of my webcam. Does it sound better now?
Yeah, it's the same sort of feedback. I don't know what it is.
Okay. I'll test one more time. Keep on going.
Sure. All right. Let me actually move into some interesting metrics for for Bitcoin over the last week or so. So I want to start, like we've already talked about active addresses. No really need to talk about it anymore. This should, or like if you're hoping for Bitcoin to continue rising into this correction or to bounce back strongly, we are going to need a relatively strong network effect. So far, we're simply not seeing it. Now, as far as other data sources for Bitcoin, they're not looking that bad. Like, for example, we talk about social volume a lot and generally social metrics on these streams because, number one, it's a sort of data source that nobody really else has on the market. We're pretty much the only data provider that captures social data. At least in this scale and size. So at the moment, we track over 1,000 different crypto-related social media channels. That's Telegram groups, Discord servers, crypto subreddits, Twitter accounts, professional trader chats. We try to listen in on all conversations that have to do specifically with cryptocurrencies. And we've developed a few metrics based on that data. One of those metrics is just social volume in general, which essentially shows the amount of Bitcoin-related mentions on crypto social media, or amount of mentions of Bitcoin within the crypto community, right? So obviously, since the drop off or since the decline, first of all, Elon news, then the China news, you can see these two spikes. Since then, we've seen Bitcoin social volume decline back into normal levels. And if we look at the general sentiment or the average mood of those mentions. You can find it here. It's called, it's a metric we call Bitcoin's weighted social sentiment. So the difference between this metric, just for those uninitiated, and this metric is that social volume only shows the amount of mentions of Bitcoin on crypto social media, whereas sentiment shows the average mood of those mentions. So all of these mentions of Bitcoin that we collect on a daily basis, and we get about 100,000 new messages, not just about Bitcoin, but about everything. We pass it through a machine learning algorithm, and it labels all of those messages as positive, negative, or ambivalent. And the result is this type of chart for every coin in our database. So for Bitcoin in particular, we're looking at the last couple of weeks. Actually, let's say the last week, which has seen a massive drop in the average mood of Bitcoin-related mentions on crypto social media. This is perfectly expected, I think, given the fact that there have been several attempts to break 40K, not successful. There have been a bunch of bearish news. So it's very much not a surprise to see, and if we zoom in here, you'll see it even more clearly, just how sort of dramatic, especially with the Stilo news, the pivot is towards a overwhelmingly bearish sentiment. Now, based on historical trends and based on several backtests that we've performed on social sentiment as a metric, there are some signs that overwhelmingly bearish sentiment is more often than not a positive sign for the coin's price action. The reason for that being is that it usually indicates that the market is undervaluing an asset and that the asset is probably a little bit oversold. And in general, it allows more room for the price of Bitcoin or any coin to grow. And then on the other hand, when you see these massive spikes in bullish sentiment, it usually coincides with either periods of a price correction like we've seen in 2019, and actually we've seen it at the all-time high here as well, or just periods of price consolidation. Like, for example, when Bitcoin broke 11K for the first time in a year, we've had massive spikes in bullish sentiment. And then we've had basically a month and a half of just a very tight range for BTC. And this isn't just for Bitcoin either. If we look at Ethereum, you're going to see a very similar picture. Most notably, you're going to see another sort of big drop in the average sentiment towards Ethereum. You can see this massive spike in Ethereum's average sentiment around its all-time high. Since then, this was just a month ago. Since then, we've gone way deep into the bear sentiment on average. So I am going to show you a few, or actually just one, backtest that we've done on this type of metric. This was published 3 months ago, where we backtested the impact of social sentiment on the coin's price. And what we found are two things. First of all, the first thing that we backtested was what happens with the price of the coin on average. This is on a sample size of all over 3,500 different events. What happens with the price of the coin, which is this green chart, on average, after the coin hits peak bullish sentiment? So basically, when we see this type of spike, for example, right? What's the average sort of performance of that coin in the 2 weeks before and the 2 weeks after the coin hits peak bullish sentiment? And as you can see, beforehand, we see a sort of stable price increase. And then as the coin begins, as the market euphoria becomes too much and the coin hits that sort of apex of bullish sentiment, we see a gradual decline in the average price of those coins. So on a scale or on a sample size of 3,500 coins, the average price of the observed coins drops by an average of 6%. And then on the other hand, when the coin hits peak bearish sentiment, we see on average the price of those coins continue to rise over the next 2 weeks. And you can also just look at the historical data for both Bitcoin and Ethereum and pretty much see the same thing, that more often than not, and obviously this is not a perfect science and historical performance is not indicative of future results, but more often than not, in the past at least, overwhelmingly bullish sentiment has not been a friend to Bitcoin and Ethereum. And then prevailingly bearish sentiment has actually been more of a friend, or has allowed the price for those coins to recover, simply because there's not a whole lot of market euphoria, and we're not seeing a reason for whales to dump and for people to sort of crash the longs or whatever. So from a social perspective or social media perspective, the fact that first of all we're seeing less and less interest in Bitcoin. There's been quite a bit of FUD and in general sort of elevated interest towards Bitcoin as it started to decline. First of all, we're not seeing that anymore. The amount of chatter towards Bitcoin has pretty much normalized back to levels before the dump. And second of all, we're seeing this pretty major decline in the sentiment towards pretty much all top caps, Bitcoin, Ethereum. I checked out Ripple. I checked out Polkadot. They're all dumping as far as average mood of those coins. So it seems like the market is very much convinced on average that we're going to see further corrections. And, buying when there's blood in the streets can be an effective strategy sometimes. Obviously, none of this should be considered as financial advice, but it definitely seems like, it seems like, according to our data, that there is some amount of blood on the streets and elevated fear among the community. So something to definitely be kept in mind. Yeah. Anyway, Brian, how are we doing?
Yeah, you tell me. How am I sounding right now?
Yeah, I think sounding a little bit less clear, but at least there's no bumping noise, so that's good.
Okay.
Can't complain.
Well, we'll at least have a clear audio. That's better than nothing.
Okay, so just one thing. Somebody's asking, how can we check out this metric? So there are two ways that you can check out the weighted sentiment of a particular coin. There are two places where you can do so. First, you can check it here on weighted sentiment. Usually I like to look at Twitter's data. And by the way, this is Twitter. The reason there are other sources of information that you can check. Twitter is usually the most reliable. First of all, because it's like the largest community of cryptocurrency enthusiasts. And number two, our machine learning algorithm was trained on Twitter's data. So it's usually the most reliable as far as the average mood of the crowd. But there are two ways that you can do it. Number one, you can click here on weighted sentiment. Or actually, this is in my favorite metric. So the way that you find it is you go to social. And you got a bunch of these sentiment metrics. Go to Twitter sentiment and weighted sentiment. And you'll be able to see it here. However, I like to go to graphs.santiment.net/social. And you get access to this by being a Sandbase Pro user. And here we have a bunch of experimental metrics, not just sentiment, but a lot of different social metrics that we haven't yet imported to Sandbase. And the reason why I like to use it here is because you can smooth this chart in and out. Or if you like to look at just long-term trends, you can smooth this more. If you like to go very granular, you can smooth it all the way down like I did so here. So two ways, graphs.santiment.net/social, or go to a project's page and click on weighted sentiment/Twitter. All right. Anyway, sorry, Brian. Did you want to take over the screen?
Yeah, sure. I'll jump back in here.
Okay.
All right. Everything look okay?
Yeah. Oh, we're going to talk about whales. Good.
Yeah, figured that would be the next step here. Before I even jump into that, I'll give a quick recap on whale transaction count, because we're seeing a similar decline to what we saw on the daily active addresses end, social volume end, and volume end. We really peaked, as you would expect, when there was this big drop off, and it looked like there was a huge whale spike here. It was the biggest we had since early February. So give or take a 3.5 month high right here. And followed by that, there was kind of a general decline, or sort of gradual decline, that is, and it didn't really recover. And we're kind of, down here, especially at the end of May, this was the lowest amount of whale transactions we had since late December once again. So big sort of 6-month shifts going on in overall whale activity, which sort of shows, it lends a little bit to this chart, which would be the amount of Bitcoin held by addresses that currently hold between 100 to 10,000 Bitcoin. Over time, generally this line here gives a pretty nice alpha predictive indicator as to where markets will be heading. So back here in December, they had around 8.87 million. They got to a high right before the all-time high of about 9.16. Yeah, right about 9.16. And literally a couple days later is when we had that all-time high in mid-April. And then ever since then, whale overall holdings here have been dropping off. It got to a low of about 9.02, which was its lowest since way back in January. And that's right around when the low hit. It actually hit its low the next day on May 22nd. And ever since then, we've had a pretty steady accumulation. And I believe in your latest article, Dino, you mentioned that there was an accumulation of about 50,000 over the last.
That's right.
Yeah, the
so
last 10
since
days.
the bottom, first of all, since the all-time high for Bitcoin, which was April 14th. Since April 14th, all the way down to May 16th, I believe, which was the current price bottom for Bitcoin. The total holdings of these two groups of holders, so basically all addresses holding between 100 Bitcoin and 10,000 Bitcoin, which are basically Bitcoin millionaires, the total amount of Bitcoin found in these addresses has declined by 140,000, I believe, Bitcoin. Let me make sure that that's correct. It's 140 or 130. It's 130, sorry. So the total amount of Bitcoin found in those addresses between the all-time high and the most recent price bottom was 130,000 less, right? Bitcoin. And then since the bottom on May 23rd until yesterday, when I wrote the article, the total holdings of these addresses have grown by 50,000 Bitcoin, which is about $2 billion, right? At yesterday's prices. Now a little bit less because Elon messed us up. But it's an interesting pattern. I like to look at these guys in particular because, Brian, if you want to maybe instead of showing the price as a bar, if you want to show it like as a line, I think yeah, and also for some reason your lines are a bit more squiggly. You mind if I share it just for a minute? Because mine for some reason have a clear or a sharper angle, and you can see the trends a little bit more clearly. So let me show you. So when I add the price of Bitcoin here, yeah, you see these sort of like right angles. That's what I mean. So if we
I think it's just because you're on a 4-hour candle, by the way, and mine's 1 day, so it's more smooth on my end. That's all it is.
Could be. Okay. So, but anyway, this is the last 6 months, right? So the reason why I like to look at these two groups in particular is, number one, the trend has been accumulation for a while. Actually, if we zoom out since the start of the rally, you can definitely see that the trend of these addresses since the start of the rally has been towards accumulation, no doubt about it. And then we see periods of sort of short-term offloading of Bitcoin from these addresses coincide with local tops for BTC. And there have been two instances in particular, obviously this one as well, but two instances in particular that I like to refer to. Number one, right around Bitcoin's at that time all-time high, we've seen a drop of about I think 40,000 Bitcoin within 36 hours, coinciding with the beginning of the correction. And then since the actual all-time high for Bitcoin, we've seen another period of downtrend in these addresses, then coinciding with another correction for BTC. And since then, we haven't really been able to recover. So I don't think it's for sure. I think it's still too early to say that we are seeing a return of some Bitcoin whales and we're seeing accumulation among institutional investors. Obviously, like I said at the beginning of the stream, Morgan Stanley just came out and said that according to them, at least, institutional investors aren't buying into this dip. But for what it's worth, we are seeing a slow but hopeful, optimistic rise in the amount of Bitcoin held by large addresses. So 50,000 is nothing to scoff at over a period of I think 10 days. I would just keep an eye on this chart. The downtrend has definitely been broken. So if you draw a line from here to here, it's let me do that. Yeah, it's definitely sort of been broken here. We've for the first time in a while seen a more confident showing of Bitcoin whales, at least according to on-chain analytics. So it remains to be seen whether this continues into the next month or not. Pretty much the same thing with the active addresses. Like if this recent bump in the upward direction is legit, if Bitcoin's active addresses continue to recover, I think it's a very good sign for Bitcoin in the midterm. Same thing with larger addresses. If we're seeing signs of confidence among Bitcoin whales, I think it's going to bode well for the price action of BTC over the summer. If not, we might see further corrections. Obviously, it's just one metric, but I think it's a pretty important stakeholder that we want to look into, right? So, Brian, I'm gonna you can take over the screen again.
Perfecto. So I will jump into BitMEX perpetual contract funding rate next, and we'll show both Bitcoin, then Ethereum. Then I think it's probably a good time to touch on Ethereum and altcoins, and then probably have a little segment for Dino and go right into questions. So we're now looking at the perpetual funding rate on BitMEX for Bitcoin. For those who followed it the last couple of months, we've become increasingly fond of this metric because it's a good combination of on-chain and sort of a crowd snapshot of how the sentiment is at any given moment for people who are putting in contracts on BitMEX for their positions. And we can clearly see that when these spikes are high, it's a sign that traders are longing to a much higher degree than usual. And when these spikes occur in sort of big clusters like this in February, it generally leads to a big top. On the temporary, sometimes these longers will actually ride the wave up and benefit, but eventually there is an event which will kind of neutralize their longs and get us back to here. The same goes for when we're super negative. When we saw this huge negative funding rate back on May 19th, it happened right around close to the bottom. We had a temporary jump to liquidate some of the shorts going on right here. And then there was another wave down where the funding rate got low once again. And then those negative funding rates eventually got liquidated once again, putting us back in neutral. And now we're riding back up a little bit, but negative funding rate is still prevailing at the moment. And that's quite interesting. It means that people are doubting this jump up. It's hard to see here, but obviously we had the price, the third wave down right here that's in progress. And the negative funding rate is actually the lowest it's been since about 2 weeks ago, give or take. And that's generally a good thing, right? If you look at this from a long-term perspective, I'll sort of zoom out to maybe the last 3 years. We can clearly see that the high points equal tops, the low points, such as Black Thursday right here, equal bottoms. And overall, you can get quite a consensus on how the crowd is looking at any given moment, and really see just how wrong they typically are over time. And when we're negative like we are now, it's a promising sign that there will eventually be some short liquidations and there will be a rise up. That being said, we're not at a huge negative point right now. It's just barely on the negative side. But if we get to here again, these kind of clusters, very good sign. Go ahead, Dino.
Yeah, just one thing to add is that it seems like BitMEX is a little bit of an outlier at the moment as far as negative funding rates. So I've been checking Huobi and Binance as well. At the moment, both on Huobi and Binance, and actually throughout the last week, the funding rate towards Bitcoin sort of was flat at 0.01%. So basically suggesting sort of break even or neutral conditions, right? On BitMEX and a few other like OKX, we have seen these sort of slight drop-offs in the funding rate towards BTC over the last week or so. So I think the derivatives market is somewhere between undecided and bearish leaning. It's definitely not showing signs of confidence in Bitcoin or Ethereum for that matter, as at least not compared to what we've seen previously. So yeah, like you said, previously throughout this latest rally since the start of the year, pretty much every spike in Bitcoin's funding rates has coincided with a local price top and an incoming correction, suggesting that the market has gone over leveraged long, and as a result, we needed a period of normalization. For the time being, that's no longer the case. The market is in fact slightly even leaning. The derivatives market is slightly leaning towards bearish, towards a bearish bias. Which I think in the midterm might actually, similar to social sentiment, be a positive sign for market recovery.
Yep. It's interesting how the confidence that we were seeing in February, March, and all the way from January, really, January through mid-April when we had that all-time high, it was just through the roof confidence. And then as soon as this big leg down happened, getting to below 50K, we haven't recovered nearly as much, even though psychologically or rationally, I should say, that should be the time when the longs really start to explode. But instead, everyone is basically closing those long contracts and even going negative once we had that next leg down. So very fascinating, kind of a psychology snapshot there. So moving over to Ethereum, kind of a similar story.
Before you go, Brian, since it's already like a half hour past, I just want to mention to everyone in chat, start giving us your suggestions as far as what coins you would like us to look into. So in the second part of the stream, what we're going to be doing is we're going to be going over a few of your suggestions as far as the types of coins that you would like us to analyze in about like a 10 to 15 minute span. So we're not going to do super detailed analysis on it, but we're going to be looking at a few different metrics and giving you our opinion as far as on-chain and social analysis of those coins. One caveat, just like I say it every week, it's best if you let us know what ERC20 coins you would like us to see. The reason for that being is because our on-chain coverage is at the moment probably the most comprehensive when it comes to Ethereum-based coins. So as far as on-chain data is concerned, we currently cover Bitcoin, Ethereum, all Ethereum-based coins, and a few other blockchains like Ripple, Binance Coin, what else? I think Litecoin. But outside of that, like for example, people ask us sometimes about Cardano and Polkadot. We don't yet have those blockchains integrated as far as on-chain data is concerned. We have a few other metrics for those blockchains like social data and development activity. We can look into that, but more data, if you want us to do a deep dive, it's probably best that you ask us for Ethereum-based coins in the comments. And then once you you send us a few suggestions, Max here is going to create a list, a poll, and then you can vote on which of your suggestions go first, second, and etc. So go ahead, Brian.
Great, thanks, Tino. So Ethereum, compared to Bitcoin, it looks as though investors are playing a little more of a logical game where the big spikes in the BitMEX perpetual contract funding rate, at least on BitMEX, this may be different on Binance and some others, we're seeing the big spikes happen after the drop-offs, at least this first wave of drop-offs. And following this ranging period, the funding rate has kind of cooled off, and it's actually back to neutral, which is a good sign for Ethereum. When Ethereum gets to basically 0.01%, that's pretty much a resting state where the longs have mostly closed because they are no longer enthusiastic about the potential of a big rise happening. They kind of tried to play the game of buying the dip here, like I said, but it kind of didn't, there was no excitement either way. It was kind of just a ranging period, and it eventually looks like the interest dried up and they moved away from it. But overall, we're back to neutral on the Ethereum. Not much else to say other than this is an encouraging sign, especially for Ethereum, where the funding rate tends to be much higher on average than Bitcoin. At least over the last year or so. It's a good sign when we actually get to neutral here. It hasn't gone negative like Bitcoin, but being neutral is quite good overall. Okay, moving on really quick to average fees. We are in basically the lowest range since mid-January, which is a good thing. The average fee is down to about $5.18, and that is quite the contrast from where we were at the all-time high at just about $70, $69.57 to be exact. And that's a good thing as well. I mean, obviously, this isn't a perfect correlative indicator, but generally speaking, when fees are low, it allows utility and traders to use the assets and cycle the assets between addresses with confidence, without fears that fees will eat them alive. And it's simple as that. We tend to see bull rallies start when fees are low and tokens can be cycled at a high degree. And then when they get really high like this, that's when the corrections happen because people no longer want to circulate their tokens.
Yeah, so I've seen a lot of discussion on Twitter in particular about what's behind this decline in fees. It seems like the consensus is twofold. A lot of people think there are two primary reasons for this. Number one is more and more transactions being moved to L2, layer 2. I have seen some charts showing the sort of evolution or the growth of activity on Polygon or Matic in particular over the last month or so. It's definitely looking promising. The amount of addresses and in general the amount of transactions being ported over to Matic or to Polygon is growing, not exponentially, but it's growing. And then on the other hand, the second reason why people think that the fees are down is because of fear. Is because the market is fearful of it is sort of in a paralyzed state. This seems to be somewhat confirmed by some of Ethereum's and Bitcoin's metrics as well. There seems to be even still a lot of sell-offs, not as high as what we've seen during the sort of early days of this correction, but there's still spikes in exchange inflow for Bitcoin and Ethereum every now and again, dips in network profit loss, suggesting that people are sending coins on the network at a loss relative to when those coins were acquired. So there are still signs of relative FUD or fear, uncertainty, and doubt, and that could very well be the reason why fees are down. But anyway, Brian, we're already 40 minutes in. If you don't mind, I'll share my screen and we can go over SanR a little bit, and then we move into audience questions.
Yep, sounds perfect.
Okay, so all right, time to shill SanR a little bit, guys. Our favorite tool for forecasting your own or predicting where the market is going to be going next. So if you haven't been here last week, you probably missed it, but every other week, I think we dedicate a segment to SanR. So SanR is a platform that we've developed over the last, it's been ongoing for a while, but it's been live for the last 2 or so months. And it is the first decentralized marketplace for crypto price predictions. So the basic idea is very simple. If you have an idea of where the market may be going next. Like, for example, if based on some of Bitcoin's metrics at the moment, let's say social data, let's say MVRV ratio, which we haven't even touched on, but is negative for Bitcoin, suggesting potentially undervalued conditions. If you believe that Bitcoin might recover from these levels just because this is a Elon, induced dump rather than something organic, you can create a SanR signal, letting saying that you believe that Bitcoin is going to continue to rise from this point out. You can add a few additional parameters like target price and stop loss. And if you want to compete against other players, participants, you can stake your prediction and enter it in a reward program. All right. So I'm not going to do it now, but you open a prediction here, and this is just, by the way, this is not me saying I think Bitcoin is going to rise from here on out. It's just a demonstration of how the platform works. If you want to, participate with other people and compete against other people's markets perceptions, you can do so here and then get awards in SAN tokens every 2 weeks. So I'm gonna just briefly show you the last round, which is round 14, which lasted between May 10th and May 23rd. And let's see what are the most effective or most effective participants. So the first one, long ETH, has had an average profitability of its signals of 19.7%. So we can see the performance of some of his signals. He's been very on point for a lot of it. We can, by clicking on any signal, you can actually see when he's created it and when he's closed it. This is for BNB. He predicted that it's going to rise according, relative to Bitcoin, and then closed it right as it started to consolidate, actually. So quite on point. He's also bet on sushi, that is going to rise. Closed it right as sushi started to consolidate. But quite a nice streak of predictions here. So a cool thing about these predictions, by the way, is that if you find a participant that you believe has proven that he knows how to read the market, you can follow him by staking some SAN and get notified the next time that he creates or closes a prediction, right? Now, the cool thing about SanR, or the coolest thing about SanR, is that whenever you create a staked prediction or you enter your prediction in a rewards program and you play against other players, that prediction gets recorded on the blockchain as an NFT. So it becomes an immutable proof of your market reputation. So if you want to build your reputation, or just, for your own sake, kind of create a blockchain trading journal, of your perceptions of the market, I think this is the best way to go about it. You create a prediction, it gets recorded forever as an NFT. There's no way that you can fudge with it. And as a result, first of all, other people can see your performance in the past and can be sure that whatever predictions you've made in the past are correct. So when they decide to follow you, they know that they're doing it, from a place of transparency. And then on the other hand, if you just want to do it for your own sake, you can see, you can go back and test or generally analyze your predictions and analyze your awareness of the market, where you thought the market was going to go and where the market actually went. You can see where you created a prediction and how the price of those coins flowed afterwards, and you can analyze your performance over time. I think it's a great tool if you're trying to improve your trading and you're trying to improve your biases, to go back and see when you created those signals and what happened afterwards, so that you can work on making yourself a better trader. So that's sort of a short pitch. Go to sanr.santiment.net so you can play against me and other players and other participants in a bi-weekly competition. So if you stake 50 SAN, you can get on this leaderboard. If you're one of the top 10 as far as the performance is considered, you get rewards. You get rewarded every 2 weeks just for knowing where the market is going to go. What's better than that? So anyway, that's a short pitch about SanR. We're getting more and more people interacting with it, which is cool. Would love to have your feedback on the platform. So check it out and then let us know in Discord or on Telegram or next time during this stream what you think about the tool, how you would improve it. Any feedback is more than welcome. So I think with that being said, we probably already got a bunch of mentions or a bunch of suggestions for the coins that people would like us to cover. Well, or Max, what is the top coin as far as voting is concerned? What do the people want to see?
Okay, let me refresh. We have Solana and Polkadot in first place.
Okay, so we've got coins that are unfortunately not on the Ethereum blockchain. So we can't do too much as far as on-chain analysis is concerned, but we can look at other types of analysis that we can that we have on the, or types of data that we have on the platform. So for coins that we don't have on-chain data for, there's still a variety of different sources of information that you can analyze the coins from. Obviously, we can look at the general sort of price, market cap, and volume data for Polkadot, but also social data and development activity data is available for all coins. Everything that we have on our database, more than 2,000 different coins, we can look at them from a social and development activity perspective. So first, I'm actually going to look at development activity for Polkadot because Polkadot is started as this Ethereum killer, in general as one of the most promising projects overall. So if that is true, we should kind of be able to see that being reflected in its development activity as well. So for those of you that are not familiar with this metric, the way development activity is calculated is what we do, we analyze or scrape and analyze public GitHub repositories of over 2,000 different projects. And we eliminate all of the events from those GitHub repositories that don't have to do anything, that don't have anything to do directly with code. So we remove any sort of comments, stars on code, because different projects use GitHub in different ways. Some projects almost use GitHub as Discord or Slack as a sort of organizational tool, whereas others use it purely to push code. So we only look at code-related events to level the playing field and make sure that what we're looking at as a final result is a representation of how much coding manpower a project has invested over time. And I think this is actually a very underrated signal for project success. Like, I usually like to show the example of Maker as well as Chainlink, two of probably the most established and probably the most trusted projects on the Ethereum blockchain. Obviously Matic now as well, but I think these are OGs, right? So when you look at Maker, you look at Maker's development activity over time, you can see that since 2017, the amount of the development activity of Maker has continued to grow. Yes, there have been every now and again, the dips, and that's more than normal. Let's do 12 hours. Actually, let's do 1 day. Yeah, there we go. But overall, the amount of coding manpower or the amount of code that has been pushed in the GitHub repositories of Maker has continued to grow, suggesting that Maker developers and the Maker team in general has continued to be committed to the project, continued to push new products, polish the product that it already has, and in general has stayed true to its roadmap, right? If we look at Chainlink, I think it's the same thing. Yeah, same thing. We're seeing continuous growth of Chainlink's development activity, regardless of what the coin's price is doing. Rain or shine, Chainlink devs are pushing code, and that's what you want to see. So let's look at Polkadot. Polkadot as well has been, and actually let's look at the last year since Polkadot's sort of price has started, or since the token was launched. I think this is quite high as far as the general development activity. First of all, overall time, the growth is indisputable. But second of all, we can actually see just how high Polkadot's development activity is compared to other projects, which is probably the most important thing, right? Like, for example, 422 doesn't really mean much to you, right? But it will mean something to you when we compare it to other projects. So the way that you can do it is we use our screener. Actually, we can just use a watch list. So let's look at all of the projects on Sandbase. So go to watch list. And it's going to take a while to load because I have a bajillion tabs open. Sorry about that. Okay, so what we're going to see now is we're going to see a list of all projects on Sandbase. There's about 2,000 projects that we currently have listed on the database. One of the options here that is already, you can, by the way, fidget with these options. You can remove some of them, like for example, let's remove rank and volume percent change. Yeah, there we go. And we can add a bunch of other options or filters for these coins. But one filter that's already here by default is the amount of development activity over the last 30 days. So when I click on this now, we're gonna filter the coins by the highest to lowest amount of development activity or work that has been put in their public GitHub repositories. So I'm gonna click on it here. One sec. There we go. So this is for the last 30 days. Out of all of the projects on our database, Cardano is number 1. Kusama is number 2, and I think Kusama has been doing pretty well for itself up until today, at least. Yeah. Look at the price chart. And then Polkadot is number 3. So currently, Polkadot, as far as the last month of its development activity, is in the top echelon of projects as far as bid link potential is concerned, or as far as the amount of work that their developers are ingesting into the project, which is always great to see. Development activity is not going to help you immediately understand or whether the price is going to rise or fall, but as a long-term indicator, I think it's one of those things where one of probably the best due diligence metrics that you can have in your arsenal. Now, the second thing that we're going to look into is social volume for Polkadot. And we have this outlier. So I'm going to zoom out of it just so we can see it a bit more clearly. And overall, it doesn't seem like there's a whole lot of additional activity towards Polkadot. So we see a few spikes in the mentions of Polkadot around the local tops, like here and here. But overall, the amount of Polkadot related mentions over the last month and a half, I think, 2 months, has stayed relatively low. We do also want to see what the average sentiment towards Polkadot is. And I think I've checked it a few days ago and it was negative. So I want to see whether that still rings true. Yeah, it is. It's actually recovered a little bit and then dropped again. So let's zoom in a bit. There we go. So on average, and this is, we've seen this increase in sentiment around its top. And then since then, it's pretty much been a bearish consensus. Obviously, it started to sort of move upward a little bit into sort of a neutral to slightly bullish territory as the price of Polkadot has continued to has started to rise. With this latest drop-off, we're once again into the sort of bearish territory, and I think this is generally a reflection of the entire market, the view on the entire market, not just Polkadot in general. I think most people think that the market as a whole is headed for another round of corrections, and that's reflected in this data as well. So overall, I think from just a long-term perspective, Polkadot is looking very well. It's one of the most actively developed projects according to our data. And then from a social perspective, there's not a whole lot of chatter around Polkadot compared to what we see usually. And secondly, we're seeing a relatively bearish sentiment towards Polkadot, which allows, similar to Bitcoin and Ethereum, probably will allow more room for Polkadot to grow than if we saw this huge spike in bullish sentiment, suggesting that the crowd was hyper aware of the rally and hyper confident about DOT's short and long-term performance. That's usually when you kind of see first signs of overvalued conditions and likelihood of a correction, right? So, okay, that's number one. What do we have else, Max? We had Solana and something else. Somebody said, gotta know what's happening with CRV. Sorry if covered, I just joined. So, got a great...
Sorry.
Yeah, so other than Polkadot, Max, what else was it?
Solana, Polkadot, Theta, and Matic. Let me give it another refresh.
Sure.
Pretty much the same.
So, gotta know what's happening with CRV. That's a question we got in the chat. Got great news for you, my friend. This was published literally today. I didn't even get to read it yet. So it's one of the Santiment team members. We were looking at CRV yesterday, and same as you, we realized that there's quite a lot of interesting information about it, or quite a lot of interesting just on-chain metrics in general and the price activity. So we decided to take a deeper look. If you're interested in what we think about CRV, and especially how it sort of correlates with a few other sort of DeFi protocols that are building around CRV lately, which are gaining value, check it out, CRV here. And I'm also seeing Crawford say there seems to be a lot of news about the SEC versus XRP. Is there any news? So I would suggest that you scroll a little bit more down on our insights page and you check out this article, SEC News Pumps XRP, but what about its on-chain outlook? I wrote this a few days ago. I haven't been keeping track of SEC News since then, so maybe something has changed, but the latest that I've seen was that on Monday or Tuesday, the SEC basically got a huge blow to its strategy against XRP. What they basically wanted from the get-go is they wanted to argue in front of the court that Ripple Labs might have known since the very beginning, since the token launch, that XRP could be deemed a security. So they wanted Ripple Labs to disclose their private conversations with their lawyers. That was like the basic foundation of their strategy. And then the court said, no, that's covered by attorney privilege, lawyer attorney privilege. And as a result, that part of their strategy has completely sort of been dismantled. And as a result, we've seen XRP pump by about, I think, 15%, get to that $1 level. But since then, it's kind of just ranged. And I write about in this article why I think, what I think are going to be some of the challenges for XRP moving forward. Because similar to Bitcoin, while its price might be showing some signs of strength, its on-chain activity isn't. Like, unless something has changed in the past couple of days, overall, the amount of interest in XRP seems to be declining. The general activity and the amount of value that is being transferred on the Ripple blockchain compared to a month ago seems to be declining. So from a fundamental perspective, at least, we're seeing worrying signs. But read the article. That's all I'm going to say. All right. Sorry about that. Let's look into Solana. Okay. So, similar to Polkadot, obviously, unfortunately, you guys decided today that you wanted to look into non-Ethereum based coins. So we're not going to be looking into on-chain data for Solana either. But we are going to check out what social sentiment and development activity is looking like for Solana. So, looking at all time, this is what you want to see. The last thing that you want to see when you look at a coin's development activity is the opposite of this chart. So although the last 4 coins that we've seen all have this type of a chart, it's not a monolith. A lot of coins actually have the exact opposite chart. Like if you look at most of the shit coins that have pretty much gone into oblivion over the last couple of years, what you're going to see is you're going to see the exact opposite of this chart. You're going to see the highest amount of development activity sort of concentrated around the ICO, around the token launch, and then since then you just see a very clear ongoing downtrend in the amount of code these guys are pushing, in the amount of effort they're expending into the project. And as a result, obviously, there's not going to be a whole lot of reason for people to get excited about your project. You're not pushing any new features. So the fact that we're seeing both in Solana and Polkadot this uptrend in the amount of development activity, I think is a good, like, regardless of market conditions in general. If you're looking at a project from a longevity standpoint, this is one of the this is a hopeful sign, definitely an optimistic signal. Now, as far as its social volume is concerned, let's look at the last year of data. Okay, so we've seen a little bit of a spike here as far as Solana's social mentions are concerned. So we've had a big spike here, a big spike at the beginning of consolidation, another big spike here before a correction, and then another spike in social mentions before this latest correction. So this is something that we see quite often. Like I said at the beginning, spikes in social volume, based on some of the backtests that we've done, these large spikes in social volume, as the coin rallies in price, what they usually mean is that the people, first of all, are becoming very aware of the rally. Second of all, the people are starting to shield that coin beyond belief. So these spikes usually mean people are talking about Solana in hyperboles. They're posting rocket emojis and heart emojis and moon emojis. They're basically just becoming overwhelmingly bullish towards a coin. As a result, the coin is overvalued on average, and it shows an increased risk of a correction. So basically, according to here's a backtest that we've done on this phenomenon. This is a test that we performed on what happens with a coin on average. Oh, sorry. So we've tested the average performance of the coins on our platform in the 20 days before and the 20 days after they get a peak social volume. They get the sort of surge in social volume relative to their previous average as far as amount of mentions on crypto social media. Not to get into details, Gary, if you want to share this link in the description of the video or in chat so people can read it. But this is the general idea. So in the 20 days before the spike in social mentions, the average price of the coins, and this is on a sample size of 650 events, the average price of the coins starts to mushroom pretty much like 6 to 5 days beforehand. And this makes perfect sense because the reason why these coins are all of a sudden starting to gain so much new social volume or so many new mentions is exactly because they're pumping. Unless coins like Matic, I don't know, Decentraland, these sort of mid-level coins, unless they're pumping, the general mainstream crypto community isn't going to be paying that much attention to them. So it makes perfect sense that they're going to be seeing this peak social volume right as the price begins to rally. And then in the next 20 days, we see a clear sort of correction on average in the average price of these coins. This is by almost minus 12% over the next 20 days. So we see this here for Solana, and we also see it, I think, if we look at Matic, we're going to see a similar image. Yeah. So let me zoom in just a little bit so you can see it. Yeah, there we go. We see, first of all, this is obviously now kind of dwarfed, but at the time it was a big spike in social mentions. We see a few more. Let me zoom in. A huge spike around its all-time high. Another sort of big uptrend in the amount of mentions before another correction. We've seen another big spike in social mentions before the start of consolidation for Matic. So it's something that we see very often for coins, right? So I'm not surprised that we are seeing the same thing as far as Solana is concerned. Now, if I look in the last month alone, yeah, a few sort of big spikes in Solana's mentions as it starts to increase in price. We've had another relatively significant uptick in its social mentions yesterday, and since then a slight correction. But overall, the only thing that I would say, usually social volume is better as a top indicator than a bottom indicator. When you're thinking about entering a coin, from a social volume perspective, the only thing that you really want to make sure is happening is that not too many people are talking about the coin relative to what the coin usually receives on a daily basis as far as its mentions are concerned. And if we look at the last 6 months, I don't think currently, actually, a little bit, yeah. Solana is still being talked about a bit more than usual. So what I would like to, the way that at least I like to analyze social data is like I would get into it here, right? When social volume is relatively low and the coin is sort of under the radar still a little bit. So, or for example here, right, before this uptrend. So currently there's still a little bit more eyeballs on Solana than I like to see it, probably because of this uptrend compared to the rest of the market or most of the market. So I would wait a little bit, but again, none of this is financial advice. It's just something that we see in our data quite often. All right. When you look at a coin like Doge and a new listing on Coinbase, does it usually reflect an increase in social interest? Absolutely. In fact, there's been, well, maybe not so much this year, but last year I wrote quite a lot about the Coinbase effect. Actually, I'll go back and find some articles for next week to share with you guys where we wrote about what happens with the coin social volume after they get listed on exchanges. Usually it's almost an instant uptick in social mentions across the board. And then afterwards you see, like, obviously volume starts to rise as well, trading volume, but that only lasts for like, that hype lasts for like a day and a half. And once the once the hype has died down, the trading volume disappears, the amount of interest disappears. You usually see a very swift correction. We've also seen that happen, weird enough, with Binance AMAs. Not so much anymore, but in 2020, there were a bunch of like Binance AMAs that Binance has done with projects that they wanted to, hype around on their platform during the IEO days. Every time that you had a Binance AMA, you would have an increase in price of that coin. You had a big spike in social mentions, and then over the next 20 days, you would see a slight sort of but ongoing downtrend in the price of those coins. So it's actually quite interesting. So for example, I don't know what this spike in Solana's mentions is. Sometimes it's because of some major news, but usually in like 90% of the cases, most coins don't really get mainstream attention unless they're pumping. So it's a pretty decent indicator of overvalued conditions when you see massive spikes in social mentions. So yeah. All right, I think that's gonna do it for us today. Sorry guys, if we haven't checked out a few other coins. I tried as much as possible to dedicate our time to Bitcoin today because there's quite a bit of data. We haven't even gotten over everything that I wanted to talk about Bitcoin. So if you're interested in sort of a full breakdown of BTC, what its MVRV ratio is looking like, what its mean dollar invested age is looking like, which is very interesting. We are going to be publishing our weekly report. So if you're a SaneBase Pro subscriber, you will get that on your email later today. So another sort of reason to sign up to SaneBase Pro. Max, if you want to flash it on the screen, the discount code for SaneBase Pro. If you don't already have a subscription, guys, when you go to checkout, just type in TWIC, which stands for This Week in Crypto, the name of this call, and you get 25% off your first billing cycle, whether that's a monthly or a yearly plan. You get 25% off SaneBase Pro. So it's already just $49 a month, which is, I think, by far one of the most affordable on-chain providers on the market. And here you get another 25% off, which I think is great. I would buy it. So anyway, Max, before we go, do you want to show people how to create polls for next week? Or should we do that
yeah,
the
let's
next
try
week?
that. I need a minute because it's the first time that I share my screen from this end. I hope everything goes all right. Do you hear me properly?
Yeah, I hear you properly. So we're making slight changes to how we collect feedback as to what coins you guys would like us to see or to analyze during these calls. So we made a platform not just for this, but in general to collect feedback. And we're going to be using this site for next week's call for you guys to let us know what type of coins you would like us to analyze so that we can dedicate more time and we can prepare ahead of time with some metrics and analysis so that we get, we find some more interesting, hopefully, metrics to talk about for next week. So Max, let me know when you're ready
I
and
still have
we
your
can show
guys'
people.
screen share on my end, not mine.
Okay.
Could you deactivate and
It's deactivated on my end. I can see. Yeah, it's deactivated on my end.
okay.
Are you sure you're sharing your screen? Maybe it's in OBS that you haven't added it.
Do you see it in Skype? My screen?
Yeah, I see it in Skype.
Okay, yeah. So Skype handles my feed, because I'm locally using it, differently than your feeds, both on sound and visuals. So I don't think I can, on the fly, solve this now, if you don't see my screen yet.
Okay, let me try to do it. I can share my screen and you can talk over me.
Also, I was told that my voice is only hearable on screen on one side. Maybe chat can confirm. And
okay.
I would be interested in my voice in general and like my sound. Yeah, if you can take over the screen share, Dino, we can try that way.
Okay, one sec. So I'm sharing my screen. Okay, you should be able to see it now, yeah?
Okay, yeah, I'm switching over now. Now chat should be able to see your screen too. Perfect. Okay, so what we are trying to do here is, like we have a very first early version of a tool that would allow us to collect your input, similar to the poll that we just did, but by doing it on-chain and utilizing our own SAN token to do it. So this is a very early version on the Rinkeby testnet for Ethereum. For people familiar with MetaMask, you can select the different networks at the top here. So I'm basically switching from Ethereum to the Rinkeby test network, and then I can connect myself as with any other dApp, any Web3 application. And we have a couple of fields. This is my own address that I'm using right now. I can fill my name. Oh yeah, now I'm looking at my screen and not at yours, I'm sorry. So, yeah, perfect. So in the middle you see like the core of the application. It's basically just one form that you can fill, put your own name, put the message that you want to like send to us, and then put a burn amount, and that would be the amount of SAN that you want to spend and burn in the process to give like weight to your question that you want to raise. So we basically have an admin account on the other end who gets all the messages displayed. They are ranked by their weight based on the amount of SAN token that were spent, and then we can like push them through and show them on stream and interact that way with the community. Sorry? Yes, so right now this is not on mainnet, this is on the Rinkeby testnet, and the button in the upper right will give you like a starting balance on both the fake SAN token that we use on the testnet as well as the Rinkeby Ethereum, so you can actually send transactions. Yes. Exactly. Yeah, so the idea was that you have seen it now for the first time. Maybe you can already play around with it to our viewers. You can claim the tokens already, send us a test message, I don't know, put in your Discord tag, and we can reply to you and make and prove that we saw the message, and then we can start incorporating this into the stream beginning next week.
Channel. It helps a lot to just grow our viewership and grow our community and get more feedback and generally more sort of people to talk about as far as the market conditions. I think that helps all of us, both you and us. So if you don't mind sharing this with people that you think might be interested in this kind of data, that would be great. I know I sometimes talk too much, but if you can get past that, I think we give some pretty nice insights over this hour and a half that we usually do. So much appreciated. Any types of shares and loves that you can send over. And I think that's it. I'll talk to all of you guys in 7 days. Thank you, everyone.
Thanks, guys.
Thanks, bye-bye.